Markets opened the week cautiously with geopolitics, trade tensions, and elevated global bond yields offsetting the support from last week's expansion of U.S. Treasury buybacks. The Treasury move lowered long end yields and drove broad dollar selling, leaving the greenback near multi month lows despite relatively resilient U.S. services data. Euro dollar is holding close to 117, sterling remains firm around 136.40, and the Australian dollar is supported ahead of Tuesday's RBA minutes and Wednesday's inflation report. The yen is also benefiting from expectations that persistent Japanese inflation could keep a September BOJ hike in play. The major exception is the Canadian dollar, which opened sharply weaker after US Canada trade talks collapsed and 50% US tariffs on roughly $20 billion of Canadian goods took effect, with Ottawa promising dollar for dollar retaliation. Risk appetite is softer across equities. US equity futures point to a modestly weaker start for the S&P 500 and Nasdaq, with the Dow closer to flat. Elevated Treasury yields continue to challenge equity valuations, while investors are also looking ahead to NVIDIA earnings, US PC inflation, and Fed Chair Warsh's Jackson Hole address. The central question is whether Warsh pushes back against the easing in financial conditions generated by the Treasury buyback announcement. In commodities, gold reached a fresh 3-month high. The metal remains supported by dollar weakness, fiscal credibility concerns, and demand for geopolitical protection. Oil is moving in the opposite direction this morning as traders reduce positions ahead of Treasury Secretary Bessent's announcement of new sanctions against Iran. Nevertheless, thin shipping traffic through the Strait of Hormuz and Tehran's threats to halt regional oil exports leave a substantial risk premium embedded in energy markets. Overall, Monday begins with a defensive tone. Dollar weakness remains the dominant FX trend. Gold is attracting haven and debasement demand, while equities and oil await greater clarity on Iran, tariffs, and the direction of U.S. monetary policy. That's all for now.